to answer your question, I think what it means for something like the Malaysian ringgit, it's a source of volatility. You know, the RMB used to be seen as a currency that didn't really move so much. It was relatively, lower volatility compared to many other currencies globally. And the longer-term message is that it's going to be changing. It probably also means that the volatility for other Asian currencies could be rising over time too, very, very clearly. I don't think that the PBOC was trying to devalue their currency. I've been hearing that term used quite a bit. And I think the PBOC has been pretty clear in saying we are not devaluing our currency. The currency was readjusted by 2%. That's not a devaluation. Instead, it's more about trying to make the exchange rate more flexible, more market determined, because it's eventually moving on to this path of becoming one of the biggest and most actively traded currencies in the world, particularly when you consider the size of its economy in the global context. So this currency actually has to flex more.
China is one of the most important markets in the world for any countries, especially the Asian countries. And yes, in commodities, the main currency used has always been US dollar. So this is where we want to promote renminbi to be used by the Malaysian exporter to be able to give the Chinese buyer the flexibility, basically, to buy from Malaysia. There are some regulatory constraints in China. For example, if you issue documentary credit in foreign currency, in this case US dollar, they are being bound. They can only issue maximum 90 days credit terms. Well, the fact is, in commodities, sometimes they need a longer credit terms. The ability to buy in renminbi enable them to issue longer term credit, 180 days, 270 days. And one of the big advantage of Malaysia financial sector is Malaysia financial sector is very liquid, which is resulting in a very competitive interest rate. And this is something that should be taken advantage by being used by Malaysian exporter to promote Malaysian products.
I think that when the PBOC came out with this one-off adjustment, you can see that there was nervousness in the market in the way that certain currencies were trading. Listen to certain thinking out there. Does this mean that the Federal Reserve could end up delaying the timing of its rate increase? But I think that some of the market thinking just needs to calm down. Okay? If the PBOC is saying that we're not devaluing our currency, and this is just a small adjustment to try and recenter to allow it to move in a better range compared to where it was before, then some of these fears should actually start to subside.
Thanks. So I listened to the presentations this morning and just wrote down a few thoughts that I'd like to share with you. None of this will probably come as a surprise, but hopefully it's a way of packaging it all together. We're in a challenging macroeconomic background. The world is really struggling for economic growth. That's the real challenge, is growth in the world economy. And from our perspective as a bank that provides a lot of trade finance, trade is a big part of the solution to get the world economy growing again. Then if we bring ourselves to Malaysia, as someone who's not based here and I can look from the outside, I'd say Malaysia is in a very fortunate position relative to many other countries around the world. The reason for that is you have an abundant supply of commodities, and we all know that. But you've also diversified the economy and now have a very developed set of industries, notably electronics that I touched upon earlier. And then geographically and economically, very well placed. There's a lot of focus on ASEAN, there's favorable trade agreements, and obviously Malaysia is a key nation within ASEAN. In fact, the largest trading partner with China among the ASEAN countries. So if you put that together, I would argue that the single biggest opportunity for growth in Malaysia may be to trade with China. Trade more with China and trade more effectively with China, and that will help deliver the growth. As I mentioned, Malaysia is China's largest ASEAN trading partner and has been every year since 2008. And Malaysia is China's third biggest trading partner in Asia, after only Japan and South Korea. I mentioned earlier that trade with China's quadrupled in 10 years, and we foresee quite strong growth in the years ahead. So today's discussion, the forum that we hosted with several hundred clients and other attendees, is really about what can Malaysian companies do to harness the opportunity that I just described. And so the emphasis of the discussion was on both the challenges and the opportunities that are brought by this internationalization of the renminbi. And after last week's events, that topic has probably never been more topical or pressing for corporates in Malaysia than it is today. If Malaysian companies trading with China hadn't previously considered dealing in renminbi or being aware of what's happening with the renminbi, then perhaps now is the best time to start doing that. If Malaysian companies are more willing to embrace the renminbi as a currency to settle trade, we know from surveys that we've done from companies all around the world, it does help build stronger relationships with China.